Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be Wednesday, the 16th of July, 2025. So before we kickstart our gist of today's Daily Dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, guys, so give me a couple of minutes or a couple of seconds, yeah, so that the voice is good, yeah. So as usual, before we jump straight into the intraday technical outlook on those various broad-based cross asset classes that we cover on the daily basis, the four major US dollar pair, as well as the major US stock indices ranging from the US S&P 500, the Nasdaq, the Wall Street 30, which is the Dow Jones Industrial Average, together with the Asia Hang Seng Index, and as well as the Japan 225, which represent the Nikkei 225, and the two key commodities market, which is gold XAU/USD and West Texas crude oil. Let's have a recap on all what has taken shape yesterday in terms of the news flow, economic data release, and as well as any relevant news flow that has also occurred in early today's Asia session, that is i.e. right before the start of our daily dose that we kickstart at the normal timing of 11 a.m. Singapore time, in terms of their respective impact on the intraday movement of the various broad-based cross asset classes. So yesterday's important news release, there are actually two. One is US CPI, and as well as the unofficial start of Q2 US earnings reporting season, kickstarting from the major financials. So let me touch on the US CPI data first over here. So on the surface, all right, let's look at the things on the surface. That means if you look at the US CPI data that came in yesterday, give me a couple of seconds, the screen is froze. Okay, good. All right, so if you look at the core inflation data, or the core inflation rate of the US, that means stripping out food and energy, it actually rose, but it rose at a smaller pace than expected. All right, so on a month-on-month basis, it came in at 0.2% month-on-month for the month of June. Yes, it was above the previous month of May print of 0.1% month-on-month, but slightly below the market expectation of 0.3% month-on-month penciled in or forecasted earlier on. And if we strip off the seasonality effect by stretching out on a year-on-year basis, the core inflation rate for US year-on-year for the month of June rose 2.9% year-on-year, above 2.8% year-on-year that was printed in the previous month of May, but came in slightly below expectation at 3% year-on-year. So initially on the surface, we do not see a clear pickup in inflationary trend by the non-core inflation data. So on the perspective or the context of it, technically the dollar should fall rather than rise. All right, so what happened is that yesterday there was actually a very wild session in the US dollar, where upon the release of this US CPI data, there was an initial, let me share with you by looking at the dollar index. Okay, give me a couple of seconds. Okay, so if you look at the dollar index over here, okay, this was the dollar index. Okay, so if you go to the hourly basis, okay, let me expand my screen so that you guys could see. Okay, so let me go down to the 15-minute chart, right? It's easier because of that 8:30 p.m. release of the data, right? At 8:30 p.m. Singapore time. So I want you all to see the impact of it, all right? Okay, here. Okay. Okay, so the data was released. Okay, this is the US dollar index. So uh, I use the US dollar index as a gauge of general dollar weakness, dollar strength. It's like an index comprises of the major currency. So it's easier to do analytical, we call it a study on the movement of the US dollar index rather than looking at the individual major US dollar pair. So the US dollar index upon the release at 8:30 p.m. Singapore time, this dotted grid line here, the dollar index actually sold off initially, then at the unchanged mark over here, then thereafter, the 15 minutes later at 8:45 p.m., there was a black Marubozu 15-minute candlestick, a black candlestick each sell off, right, the dollar index. Then after this sell off, this is the lowest, this is the low, and the dollar index rallied all the way until the close of the US session over here, right, at around this 4 a.m. Singapore time, right? It rallied all the way, all right, into the US session. So what causes this dollar to actually rally so steeply after the release of the US CPI data? Initially, there was actually a sell-off. So this sell-off actually in context why by looking at the surface number of this so-called CPI core inflation rate CPI year on year, where it came down slightly below expectation, which actually represent that inflation is not really that hot in the US. But if the market participant starts to break down the individual basket of the CPI component, all right, because you know that CPI consists of various items, there was actually signs that the tariffs that is introduced by the White House in April, don't forget, tariffs is not 0%, even though there's ongoing negotiation here and there. There are actually tariffs in place already, right? At a minimum of 10% on the average, starts to seep in into the US economy on the various item in the US CPI basket. So what are these items? So when the market participants actually went down to dive into a deeper look over here, okay, okay, effects of the tariffs were visible in a number of categories, with household finishing up 1%, the biggest rise since January of 2020. Okay, video and audio products also up by 1.1%, the most since February last year, and toy prices climbing 1.8% on the month, the most since April 2021. So that being said, over here is that some of the baskets in the CPI, some of the items in the CPI basket actually rose more than expected. So that create a bit of fear, stating that perhaps in the next few months, other items also starts to rise in tandem as well, given the fact that we know there's a lot of uncertainty regarding how the US White House wants to implement their array or different category of tariffs. And also, you know that Trump himself, he's very volatile. At any point in time, he could actually jack up tariffs based on his whim and wishes if negotiation don't turn up well within his expectation. And that causes the CME Fed Funds futures to lower the odds of the expected first interest rate cut by the Fed that is expected to come in September to less than 60%. So what do I mean by this? Okay, let's look at the current situation first, right? So you go to the CME Fed Watch tool. At the moment in time, this is almost penciled in 100%. I'll say close to 100%. Market is not expecting the Fed to do anything on the end of this month, which is the up and coming FOMC meeting, which is 30th of July. All right, 97 or 98% expectation by the Fed funds futures traders expect the Fed to maintain the Fed funds rate at 4.25% to 4.5%. But what's interesting, after the release of yesterday's CPI data, where market participants skew down or drill down to the individual basket of the CPI items that's showing a increase due to the tariffs implementation that has taken shape since April, the odds of the September rate cut, which is 17th of September, previously last week is about around 60% to 70%. And after yesterday's release of the US CPI data, it has reduced to below 60% at 57%. So that reduction in the odds of that potential first rate cut to come in 17th of September FOMC meeting implies that Fed funds futures traders are not so confident on a much more dovish Fed, but rather a Fed that continues to maintain its we call it wait and see rhetoric. So that causes the US dollar to actually rally over here. So if you look at the movement of the US dollar index, all right, so this is the 5-day movement over here. Okay, so what we could see, this was the big spike, all right, over here, right, rally up. Then thereafter, it start to trade sideways at the start of today's Asia session. All right, so let me change this date over here. This should be 16th of July as we are speaking right now. All right, so this is a 5-day rolling performance, able to us to see the 5-day moving trend of the US dollar against the other major currency. So on a broad-based basis, the dollar is actually on the 5-day rolling performance basis. That means the 5-day window of moving trend. Right, it's moving day by day because it's 5-day rolling performance. The dollar is strengthening almost all against the other major currency, with the exception of the dollar CNH, which is almost like a sideways blip, because the dollar CNH, which is the dollar Chinese yuan, is a controlled currency where PBOC every day dictate the yuan movement to actually fluctuate in a very tight band. All right, over here. So the dollar rallied the most against the Japanese yen, which is up by 1.8% on a 5-day rolling performance basis, and also up the most against the sterling, up by 1.5% over here. So if you look at the 1-day rolling performance basis over here, it's just go sideways in today's Asia session. So later I'll touch on the intraday technical outlook on the various 4 major US dollar pair that we cover. That also includes the dollar, the Aussie dollar as well, which is actually right now trying to hold against some key support level, right at the 65.10 level. And I'll highlight to you why this 65.10 level is significant. All right, so that's for the FX market over here. So now let's talk about more interestingly on the movement of the major US stock indices. So still recall, yet start of this week, we do have a bearish bias on the major US stock indices, on the SPX, the Nasdaq, and the Dow Jones Industrial Average, stating that there's some technical elements that's showing signs of a bearish, we call it a reversal, ahead of yesterday's major US financial earnings result. And the price action indeed moved within our expectation, where the Dow Jones Industrial Average, which is in our platform, we call it the Wall Street 30 CFD index, for more than is one of the worst performing major indices, because there are 4 of them. So the Dow Jones Industrial Average actually down by negative 0.98%. The worst was the small cap Russell 2000, down by negative 1.99%. So the reason why the Nasdaq 100 is able to buck the trend slightly is up by 0.13%, but if you look at the intraday movement of the Nasdaq 100, it's not that great. It's actually saw a sell-off at the close of the US session. Initially, it went up, tried to hover around the sideways range, close around at the 23, hovering around the 23,000 high. That means there's a fresh all-time intraday high before plumbing downwards to close at 22,884. So that was also below our excess pivotal resistance that we highlighted yesterday at around the 23,020 level on the Nasdaq 100. So the initial push up on the Nasdaq 100 and why they kind of managed to inch out a slight gain of 0.13% is due to the outperformance of the mega cap technology stocks. Some of them, not all of them, because this mega cap technology stock has a significant weightage on the Nasdaq 100 compared to the S&P 500 and most importantly the Dow Jones, because the Dow Jones Industrial Average does not have any huge significant weightage in NVIDIA. All right, so the intraday movement of the Nasdaq 100 is not that great because it sell off towards the end and close near the intraday low of it. All right, over here. So if you look at the heat map of the S&P 500, what you could see is that it's almost more in the sea of red than green, and the only one that is showing a deep green is the semiconductor industry. And out of this semiconductor industry within the technology sector, the leader is NVIDIA. And why NVIDIA managed to pop up by 4% to a fresh all-time high is all due to the positive news flow out from US White House administration that allow NVIDIA to sell lower-end H20 semiconductor accelerator chips to China. So that boosts the sentiment in NVIDIA, but unfortunately, it's not be able to spread to the other segment of the US market as represented by the S&P 500 broad-based heat map of all the 11 sectors. And one of the worst hit was the financials over here. All right, so the financials, yesterday we have JP Morgan reporting results, we have Wells Fargo reporting results, and we have we call it Citigroup reporting result, and we also have BlackRock that reports results as well. Where's BlackRock? Yeah, over here. All right, so out of this 1, 2, 3, 4 major US financial firms reporting their Q2 earnings yesterday, only the Citigroup managed to close in the green, up by 3.68%. The rest, JP Morgan is down by negative 0.74%. Wells Fargo was the one of the worst hit, down negative 5.5%, and BlackRock was down a whopping negative 5.8%. So one of the reasons why the earnings of Wells Fargo was so weak, it was because it actually cuts net interest income margin guidance, and as well as there's a miss in one of the segment of its revenue. Yeah, so it actually lowered down its full year guidance for net interest income after a quarter of tepid growth amid the ongoing trade war, and as well as some of this revenue segment. It actually miss so-called okay, so the net interest margin was a miss. So this particular segment came in below market expectation, and it also lowered its full year guidance for the net interest income as a whole. So it seems to me that suddenly there's no sound again. Okay, test. Okay, give me a minute. Mic test 1 2 3. Test 1 2 3. Okay, 1 second. Let me check. Hopefully the sound is good. Test 1 2 3. Test 1 2 3. I'm not sure. Is it working now? Hopefully. Okay, it seems to me that there is still no sound. That's very strange. Let me do a check again. Mic test 1 2 3. Testing 1 2 3. Test. Test 1 2 3. Mic test 1 2 3. Test. Okay, let me do a, sorry about that. It seems to me that there's some issue with the sound. Not sure whether it's, I could see my voice bar that is moving, but appears that some of us is unable to hear a sound. Okay, let me do a check. Give me a couple of seconds to do a check again. Mic test 1 2 3. Test 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 1 2 3. Mic test 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 testing 1 2 3. Test 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 1 2 3. Testing testing 1 2 3. Test 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 test. That's pretty strange. Mic test 1 2 3. Test 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 1 2 3. Okay, I think it works now. I think it seems to me that there's some issue with the go to webinar. All right, so from what I can see that my voice bar is in green, so it should be working fine. Because I'm not sure what happened. Initially there was some kind of glitch in the system. All right, so where we were earlier on. Okay, we're talking about Wells Fargo. So Wells Fargo lowered its full year guidance net interest income after Q2 net interest income margin actually fall short of analyst estimate of 11.8 billion. So that causes its share price to fall. And also on the other hand, let me share with you guys BlackRock itself as well. So very quickly, BlackRock, all right? Okay, so what we see over here is that BlackRock was share price performance exposed earnings release yesterday was actually the worst single day decline in the past years earnings in the past years where they report their earnings. So all right, over here. So on the intraday basis, the share price actually fell as much as -7% over here. So one of the reasons why BlackRock share price came down so drastically on the downside was due to redemption from some of its product line, where this multi-asset and overall fixed income strategy had redemption over here, and also total performance fee were down by 70 million from a year earlier. Right, so that actually created a negative feedback loop in the share price of BlackRock, and eventually, because we know that the financials as a whole has a significant weightage on the Dow Jones Industrial Average rather than the Nasdaq 100, so we saw the Dow Jones Industrial Average underperforming the S&P and the Nasdaq 100 yesterday by down by almost 1% at negative 0.98%. So later I'll share with you what are the key levels to watch on the US Wall Street 30, the intraday trend bias as well, and as well as the intraday trend bias and the key levels to watch on the Nasdaq 100 and the SPX. Okay, so one more particular interesting thing I want to share with you guys is the current performance of the Asia Pacific stock index right now. So we know that yesterday the performance of the US stock market is not so great. It's in fact rather lackluster, and in fact slightly tilt towards the bearish side of the story, or the bearish side of the intraday movement, but it doesn't have very clear negative spillover impact to the Asia Pacific stock indices as we are speaking right now. Even the Nikkei 225, which is almost unchanged right now as we are speaking, and the Hang Seng index and the Hang Seng indices is actually very positive for the, I think, the third consecutive session after there's a bullish breakout from the 20-day moving average that we actually highlighted earlier on. All right, so the Hang Seng index is up by 0.47%, and the higher beta Hang Seng Tech is up by positive 1.17%, the outperformer, and the HSCEI, which comprises of the China H shares listed in Hong Kong Stock Exchange, represented by this benchmark called HSCEI benchmark, which is the Hang Seng China Enterprise Index, is also up by a positive upbeat tone of 0.6%, despite we start to see a stronger US dollar overnight over here. And the rest of the other Asia Pacific indices are also not showing deeply in the red. We have the Thai X is up by 1.12%. The Singapore Straits Times Index continue to buck the trend or continues to actually inch fresh all-time high. So right now we are also on track with another, I think this is the 7th consecutive day of potentially doing a fresh all-time closing high at around 5 p.m. Singapore time today. We shall see. So now it's continuing to actually up by 0.24% at 4,129. And the rest of the region is also rather positive. Indonesia is up by 0.5% and Thailand is almost unchanged. The one that is in the outlier is so-called the Australia ASX 200 is down by negative 0.8%, and the Kospi is down by negative 0.5%. So other than these two outlier, the South Korea stock market and the Australia stock market, the rest of the Asia Pacific stock market are still in the green, despite that strong intraday dollar bounce yesterday. So what causes this movement of the Asia Pacific stock indices as overall, more of them to be more bullish than bearish, rather than purely technical factors which are highlighted yesterday, is this particular trade-driven news flow coming out from the US Treasury Secretary Scott Bessent over here. So Scott Bessent, yesterday he made an announcement, asked the market not to worry about China tariff deadline. So still recall, China tariff deadline is different from the rest of the world. Okay, the rest of the world has extended deadline on 1st of August as announced by the US White House, Trump himself last week. But for China, there's a special leeway to actually, because of that ongoing, that previous what I call Geneva talks, where US is actually having an agreement to allow China to ship raw materials to US, and also China, US now allowing China to get some of the semiconductor chips, the lower, not the higher end one, the lower tier, which is NVIDIA announced yesterday, that allow the China so-called trade truce to actually extend much further on the deadline on 12th of August. Okay, not with the rest of the world 1st of August. So Bessent yesterday gave a very comforting statement saying that ongoing talks between US and China are in a very good place ahead of the expected meeting. Ahead of an expected meeting in the coming weeks, which day we are still unknown at this moment in time. So he's saying that even the US China tariff truce is flexible, telling market participants not to worry about the 12th of August deadline. So this 12th of August deadline, there could be a possibility that it could be delayed much further down the road, given that he's just mentioned the words called flexible. So given this comforting statement coming out from a key cabinet, we call it a member within the US White House administration, which is the US Treasury Secretary Scott Bessent, seems to us that that create a positive feedback loop to the majority of the Asia Pacific stock market, despite the dollar sharp intraday movement yesterday. All right, over here. So with that, that sum up the so-called first segment of today's daily dose. So now let me touch on the second segment of today's daily dose, which is the intraday technical outlook on those broad-based cross asset classes, starting with the FX market. So before that, let me expand my screen. All right, so now starting with the FX market first, with the euro dollar over here. So the euro dollar yesterday broke below our pivotal support at 116.60, and right now it actually slide all the way down at the 12 a.m. mark US Singapore timing. Then thereafter, after the 12 a.m. mark Singapore timing, prices starts to go sideways. That means the initial 3 hours of sell-off that kickstarted ex-post US CPI release starts to stall. And where is stall? It's stall exactly at the medium-term ascending channel from 13th of May 2025 low that is still intact. All right, so we're talking about this channel over here. Okay, so what we could see over here at this point in time, I do not want to be so outright bearish given that price action has stalled at a key technical element, which is the lower boundary of this medium-term ascending channel of the euro dollar that is still in place since 13th of May 2025. So with that one positive element over here, the RSI also starts to exit out from a extreme oversold level that was made yesterday at the 23 level mark over here, but upon hitting this extreme oversold level, there's no bullish divergence. So with this rather not so much of a positive technical element, for today, intraday outlook on the euro dollar, I will flip to a neutral bias instead. So neutral between 115.80 and 116.60. But however, if at the start of the European session, all of a sudden, if price action starts to break down with an hourly close below 115.80, then that I would actually got to actually I have to move in line with the ongoing bearish tone of the euro dollar if 115.80 breaks to the downside, exposing the next near-term support level at 115.10 slash 115 figure level over here, which is this level here. Okay, 114.90, which is the 50-day moving average. Okay, so it's a zone. Okay, let me put it in writing. 114.90. All right, so for now, maintain our neutral bias, flipping to a neutral bias, I would say, pardon me, between 115.80 and 116.60 on the euro dollar. Next up will be the sterling dollar. So the sterling dollar was a weaker movement, weaker pair compared to the euro dollar. That means the sterling is underperforming the euro uh, by this breakdown of this medium-term ascending channel from 13th of January 2025 low, and also broke down below our pivotal, broke down below this level at no, broke down below the medium-term ascending channel from 13th of Jan 2025 low. Okay, pardon me. So what we could see over here is that RSI is also not showing any signs of a bullish, clear bullish divergence as well. It didn't actually hit a kind of an extreme oversold level. So in fact, yesterday oversold reading at 28.17 is much lower than the previous oversold reading, previous extreme oversold reading on 2nd of July, which was 16.7 over here. So given said that it's not really at the extreme oversold level, there could be some form of bearish movement that could take shape today today potentially. So with that, I will flip to a intraday bearish bias stance on the sterling dollar for today at 134.30. Short-term pivotal resistance level previously was this set of lower low, okay, the latest lower low, and also the latest so-called previous minor rebound. This minor rebound can't maintain the upside momentum, and where it broke down, exposed US CPI data release, we give a bit of credence. This is a important sentiment level, where upon this level breaks at 134.30, we see the rush of a intraday sell-off that kick-started at the 9 p.m. Singapore time yesterday all the way down to 12 a.m. Right, so this seems to be a very important psychological sentiment level. So with that, I'll be using this as my pivotal resistance, 1.3430 on the sterling dollar. We'll flip to a intraday bearish bias, respecting yesterday's bearish tone that may potentially continue into today's session, given that the current hourly RSI is not yet deeply oversold. A breakdown below 1.3375 may expose the next near-term support level at 133.25, which is this minor swing high area of 16th of May, now turns into a pullback support. Below 133.25 exposes 132.50 next, which is the minor swing low of 15th of May and 16th of May. Only hourly close above 134.30 may invalidate today's intraday bearish bias to see a potential rebound, recapturing 134.90, which is the 50-day moving average. Above it may kickstart the return of a potential fresh impulsive upmove sequence in first step, exposing the next intermediate resistance at 135.45, followed by 135.80 next. So that's for the sterling dollar. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar plunged down as well, broke below our Titan pivotal support that we have at 65.40, but managed to stop at this former 8-week range resistance that was previously a resistance level in the last 8 weeks. So if you go to the daily time frame chart, this is what I mean over here. Okay, so this is the previous, that previous complex range configuration. Hit the bottom at the 20-day and the 50-day moving average before rebounding over here. So this former 8 weeks of range resistance now turns into a pullback support level where price action managed to find some stability after yesterday's exposed CPF data sell off. So given that this is an important psychological level where price action managed to form, I do not want to be outright bearish at this point in time. So I will flip to a neutrality stance for today for the Aussie dollar at this moment. So neutral between 65.10 and 65.10 and 65.40, pardon me. Hourly close and the bullish breakout above 65.40 will flip the honors back to the intraday bulls again to revisit 65.75. So 65.75 was our first resistance level that we made yesterday. So this level was made. Then thereafter it's sold off. So above 65.75 we'll see a retest at the psychological 66 figure level, which is very important level. So the bulls got to have a very clear bullish breakout above 66 level, where previously it tried on the 11th of July before staging this minor corrective decline again. So once we see the 66 figure level taken out on the upside with an hourly close above it, that could potentially increase the odds of a fresh new impulsive up movement on the Aussie dollar. So for today, maintain a neutrality stance between 65.40 and 65.10 for now. Next up will be the dollar yen. So the dollar was the strongest against the yen yesterday, against the Japanese yen yesterday. So it continued to squeeze upwards. All right. Yesterday initially we wanted above our pivotal resistance at 148. Invalidating our minor bearish setback scenario, and right now it's actually approaching the 149 figure level, psychological level, and as well as the 200-day moving average at 149.60, which also correspond to the upper limit of this ongoing minor ascending channel that the price action continues to evolve in since the low of 1st of July. So given that it's coming to this key inflection level at 149.60, I do not want to be so bullish right now, given that it's only a few pips, 60 pips away from this level. And if I were to have the very clear pivotal support will be at 148, which was yesterday's breakout of this former minor swing high area. So in terms of the reward risk ratio perspective, it's not attractive at all. So I will flip to a neutrality stance for today between 149.60 and 148 figure level. If price action suddenly eruptively at the European session or even the US session starts to break down below 148 figure level, and that potentially could trigger off a lot of stop loss, late stop loss level being triggered on the bullish side of the story, and may see a potential corrective setback reasserting itself, exposing 14680 slash 145.55 in first step. So that's for the dollar yen, and also sum up the intraday movement on this broad-based cross asset class on the FX market over here. Okay, next up will be the so-called next up will be the intraday move a technical view on the major stock indices. Okay, about time twisting today. So let's start with the Hong Kong 33 first. All right, so the Hong Kong 33 continues to pierce up as expected, hit our resistance that we mentioned yesterday. So we have the bullish bias since late last week and even the start of this week as well. Resistance level has really been met, which is the medium term swing high area of 18th of March and 19th of March. Why is a medium term swing high area? Because previously upon hitting this 24,850, it starts to do this kind of close to about at least 3 months plus of consolidation. It dipped down, try to actually push back up again. So this is considered as a medium term swing high over here. So upon hitting the medium term swing high, what you could see is that the hourly RSI continues to be in a bullish momentum condition, has managed to be held above a series of higher high, and also there is no bearish divergence over here. There's no clear bearish divergence. All right, if you look at the last set of higher high, okay, at this point in time. Then with that, I would be using a Titan short-term pivotal support level for today, which is yesterday US session low. Upon the release of the CPI data, it did actually fall and continues to do a minor bullish reversal, hitting today's resistance, hitting that resistance at 24,850 at the start of the Hong Kong stock market session. All right, so using a Titan short-term pivotal support for the Hong Kong 33 that is representing the Hang Seng Index at 24,390, we will still maintain our intraday trend bullish bias. Above 24,850 exposes 25,065 slash 25,150 next, which is a Fibo extension one-time level from the low of 20th of June. Yeah, only a bearish breakdown with an hourly close below 24,390, so that would invalidate the intraday bullish bias to kickstart a minor corrective decline sequence again, retesting the 20-day moving average, which confluencing very closely to this minor congestion graphical support area from 10th of July to 14th of July at 24,050 next. So that's for the Hong Kong 33, maintaining our intraday trend bullish bias using a Titan short-term pivotal support at 24,390. Now up next will be the Japan 225. So this Japan 225, let me share with you one intraday so-called not intraday, one intermarket analysis pertaining to Japan 225, which is very important. We know that in the last few days, we start to see the spike up in the JGBU. All right, so the JGBU starts to do a spike up. All right, so this JGBU right now is now retesting the current, okay, this is the JGBU, the long-term JGBU. Okay, so this JGBU is now retesting the current fresh all-time high at 3.2% that was printed previously on middle of May this year. And right now, price action after it consolidate and now about to break above this current all-time high again, showing no signs of a bearish reversal. So a lot of media reports stating that if the JGB yield, the 30-year JGB yield continue to increase on the upside, that could potentially increase so-called holding funding costs in Japan, and potentially that could see a lot of Japanese firms go bankrupt. And technically, from this kind of viewpoint, the Nikkei 225 should crash. But what's interesting over here is that we don't see any signs of crashing in the Nikkei 225 right now, just not based on the technical perspective. And one of the reasons why Japan is in a very different context over here. So the rise in the JGB yield may potentially force corporation to bring forward their fixed income investment plan, because do not forget, Japan in the 30 to 20 over years, they have been living in a very low interest rate environment where Japanese firms keep holding their fixed income or fixed asset investment plan. That means they don't actually invest in capital because they always believe that interest rate will be very low. So since if interest rate is very low, I must well take my own sweet time to actually start to invest or do business expansion by getting loans or whatever. But if interest rate in Japan continues to raise higher and higher due to a Japan exiting out from a deflationary environment, firms may be forced to actually front load their business expansion plan instead over here. So if you look at this intermarket relationship between the spread of the 30-year JGB yield minus off the shorter term JGB yield. Okay, so this is what I mean. Okay, so at the top here is the 10-year JGB yield minus the 2-year JGB yield. So this yield spread. And the bottom is the 30-year JGB yield minus the 2-year JGB yield. So if you look at it, this top two chart, the spread, move in tandem with the Nikkei 225 since the pandemic of March 2020. So ever since this spread of this dark blue line and the pink line slope upwards, the Nikkei 225 also slope upwards. And what's interesting over here is that in the last few months, in May, in June, over here, okay, in May, where there is this U-turn in the 30-year JGB 2-year spread and the 30-year 2-year JGB spread, indicating that the 30-year and the 10-year JGB yield is moving at the faster rate on the upside compared to the 2-year. That also saw the Nikkei 225 found a medium-term low in April and it starts to move upwards. So if the longer term JGB yield continues to move at a faster pace than the shorter term 2-year, led by the 30-year JGB yield, which I shared with you earlier on, that's showing no signs of a bearish reversal condition, it should be positive for the Nikkei 225 based on this intermarket correlation. And also I explained to you all the fundamental reasoning earlier on by Japan is a different context because it managed to exit from a deflationary trend early on. So that's the reason why, even though media reports stating that 30-year JGB start to spike up, there could be more Japanese companies bankrupting itself. At the moment in time, the Nikkei 225 is not showing any signs of crashing, and in fact, the Nikkei 225 didn't crash today. All right, it's still calling to hold a stable. So with that in mind, bearing that is the bigger picture, now let us switch to the intraday movement of the Japan 225. So Japan 225 now is breaking up from this bullish ascending channel. Get bullish bullish descending wedge. Pardon me, a bit of tongue twisting. So from this high of 9th of July all the way down to 14th of July, it's actually evolving in a bullish descending wedge configuration. What do I mean by that? The lower the price action of the lower high, the slope is lesser than the slope of the lower low. And right now, upon retesting the 20-day moving average, very close to it, price action is attempting to do a bullish breakout above this upper limit of this minor bullish descending wedge configuration, which is at 39,750. And the hourly RSI continues to show a series of higher low and rebounding right exactly at the 50 level mark, hasn't hit the overbought region yet. So with such positive element on the Japan 225 for today, we'll be flipping to a bullish buyer's stance using the lower limit of this bullish descending wedge configuration, which is at 39,145, and also this medium term trend line support that I drew from the low of 23rd of May, confluencing at 39,145. All right, so using 39,145 as my short-term pivotal support level, we'll flip to a intraday bullish stance on the Japan 225 with the first resistance to watch at 40,040 upon the break of that 39,750. Above 40,040 in first step sees 40,355 next over here. I will tighten my pivotal support if we have a very clear hourly close above 39,750 to 39,400, which synchronized with the 20-day moving average very closely, and as well as yesterday's Asia session minor swing low, or yesterday Asia session low. So for now, given that it hasn't have a clear breakout above 39,750, I'll be using 39,145 as my short-term pivotal support level. But however, if suddenly price action don't move according to our analysis and starts to break down below 39,145, today's intraday bullish buyer's view will be invalidated to see a choppy corrective decline to revisit the former range resistance from May 2025 high, now turns into a pullback support at 38,850. A breakdown below it potentially trigger off a deeper corrective decline to revisit 38,450, which is the 50-day moving average, I think, as the next support level. All right, so that's for the Japan 225. Next up will be the Germany 30 over here. So the Germany 30 managed to actually help very closely at the medium minor ascending channel support from the low of 20th of June over here. Still no change, so I'll be watching 23,950 as my short-term pivotal support that we have yesterday. So maintain that bullish buyer's stance for a potential recovery for today. But I do have an upside trigger level for today, which is at 24,180. So we need to have a fast break above 24,180 to increase the odds of this intraday recovery scenario potentially to expose the next near-term support level in first step at 24,320. So these are the two key resistance to watch for today. But however, if price action can't reverse upwards and break down below 23,950, potentially we may now start to see a deeper corrective decline scenario in play, exposing the next near-term support level at 23,815 in first step, which correspond to the 20-day and the 50-day moving average. A breakdown below it sees a deeper slide to revisit the 2nd of July and minor swing low area, and 3rd of July minor swing low area at 23,640. So that's for the Germany 30. Onwards, next will be the major US stock indices. So the major US stock indices, the worst performer that we cover on a daily basis, which is the three of them. We don't cover the Russell 2000. So the US Wall Street 30 representing the Dow Jones Industrial Average broke down below our first support level, which is at 44,170. So now it seems to be en route to do this minor corrective decline sequence. We in its medium-term uptrend phase that is still intact, as price action going to trade above the, still trading above the 50-day moving average. So for today, we are using a Titan short-term pivotal resistance zone, 14,170 slash 44,170 slash 44,310. And given the fact that there could be a minor bounce taking shape at the start of the US session, given that the hourly RSI has really slipped into an oversold region. All right, so as long as this potential minor bounce didn't surpass 44,310, that's the maximum of the short-term pivotal resistance zone I highlighted. Potentially, there could be another bearish buyer's leg coming into the US Wall Street 30 on the intraday basis to expose the next near-term support level at 43,800 slash 43,600 next, which confluence with the 200-day moving average. Only a breakdown below 43,600 may see a deeper minor corrective decline today, exposing 43,290 slash 43,160. However, if price action starts to break out above 44,310, today's bearish buyer's view will be negated to see a squeeze up to revisit yesterday's pivotal resistance, which was yesterday's rejection level at the start of the Asia session at 44,480. Above it sees the 7th of July minor swing high at 44,850 next. So that's for the US Wall Street 30. Very quickly, the SPX 500. So the SPX 500 initially did a blip up due to NVIDIA positive news flow, but can't have a positive follow through and starts to trade all the way down and almost hit our first support at 6,220, but can't break below it. So since it hasn't broken below 6,220, we will still maintain that pivotal resistance at 6,290. Still maintain that intraday bearish bias for today. Breaking down below 6,220 may expose 6,180 next in the next step, which correspond to the 20-day moving average. And also breaking down below 6,220 will potentially trigger off the start of a minor corrective decline sequence within its medium-term uptrend phase for the SPX 500. Only a bullish breakout above 6,290 today invalidate today's intraday bearish view to see the start of another impulsive up move sequence, exposing the next near-term resistance at 6,330 slash 6,355, followed by 6,370, 6,380 next, that both are defined by Fibo extension clustering levels. Lastly will be the Nasdaq 100. So the Nasdaq 100 yesterday, we do have an access at 23,020. So this access was being tested at the start of the US session yesterday, but can't have a proper breakout and starts to reintegrate down below 22,920, right? So indicating some form of bearish biasness coming into play on the Nasdaq 100, and also the hourly RSI also broke down below the 50 level mark and hasn't hit the oversold region yet over here. So with elements that are still pointing to more bearish factors rather than bullish factors, I will still maintain our intraday bearish bias view. 22,920 slash 23,020, that will be the short-term pivotal resistance level. First support to watch will be at 22,600, no change. Only a breakdown below 22,600 will increase the odds of this over trigger of this potential minor corrective decline sequence within its medium-term uptrend phase that is still intact, exposing the next near-term support zone at 22,390 slash 22,235. Only a U-turn, a bullish reversal, and the hourly close above 23,020 that would invalidate today's intraday bearish biasness on the Nasdaq 100 to see a squeeze up for a fresh impulsive up move sequence to take shape again, exposing the next resistance on the intermediate basis in the first step at 23,190, followed by 23,400, 23,480. Next, both are defined by Fibonacci extension clustering levels. All right, so that sum up the major stock indices intraday outlook. So let us now move forward to the commodities market, starting with Gold XAU/USD. So Gold XAU/USD managed to survive at the 50-day moving average and also survive at the medium-term ascending trend line that is still in place since 31st of December 2024 low, and which is so our pivotal support that we have yesterday, 3,328. So given that there is no clear break below 3,328, we'll still maintain a intraday bullish bias for now. All right, so first resistance to watch will be 3,360, 3,374, which was yesterday's swing high that has been tested in the last three sessions. So 3,360, right? 3,374, right? So these are the levels to watch. So only a breakout above 3,374 will increase the odds of the start of a fresh new minor impulsive bullish sequence, exposing the next near-term resistance at 3,400, followed by 3,450, which is the 16th of June minor swing high. Over here, however, if price action starts to do a bearish breakdown below 3,328, if hourly close below it, then today's intraday bullish recovery view will be invalidated to see a choppy corrective decline to revisit the 9th of July minor swing low area at 3,293, 3,282 next. So that's for Gold XAU/USD. Next up will be the West Texas crude oil. So the West Texas oil continues to trade lower below the 20-day and the 200-day moving average after that fake blip up over here, and also trade below this 67, 60, 67, 64 level. Okay, that try to bounce at the start of yesterday US session, but can't bounce much further. So price action right now seems to be retesting this minor range configuration lower limit since the low of 24th of June. So still maintain our intraday bearish bias within this minor range configuration as price action continue to seek out to retest its lower limit using first resistance level at 67, 64. 69.15 will still be my pivotal resistance level. Key near-term support level to watch will be 66.10, followed by 65.20, which is the lower limit of this minor range configuration. Only hourly close and a bullish breakout above 69.15 will invalidate today's intraday bearish bias within this range configuration to see an extension of a potential corrective rebound sequence taking form, exposing the next intermediate resistance level at 70.60, pardon me, followed by 73.60, which is the 61% Fibonacci retracement of that previous sell-off from the high of 23rd of July all the way down to 25th of June, and as well as the former minor swing low of 18th of June and 20th of June now turns into a pullback resistance. All right, so that's also sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today's key data stretching into the start of the European session will be at 2 p.m. The core inflation rate out from UK, where market is expecting to rise at the same pace of 3.5% year on year from the previous May print of 3.5%. So that could potentially impact the sterling dollar, the sterling crosses, and the UK 100 index. And as we go into the US session, we have the PPI data, not already a tier 1 inflation data, more of a tier 2. So this core PPI data year on year will be releasing at 8:30 p.m. Singapore time today. Then thereafter, we have one Federal Reserve official speaking at 9:15 p.m. Fed Hamid, and followed by 10:30 p.m., which is the EIA weekly crude oil stockpile change that could impact the intraday movement of the West Texas crude oil. That is 10:30 p.m. Singapore time. And thereafter, we have 6:30 a.m. Singapore time tomorrow, Thursday, Fed Williams speech. And before the start of our daily dose, at 7:50 a.m., we have Japan trade data, balance of trade. So that could potentially influence the dollar yen, the yen crosses, and the Japan 225. And we know that today will be the second day of the US Financials Q2 earnings report to continue. So what are the earnings that could actually impact the movement of the broad-based US stock indices? So for today will be Wednesday. So before the start of our US session, we have Bank of America, Morgan Stanley, and Goldman Sachs. And one thing I want to highlight is ASML. ASML. So ASML is a very important semiconductor company in the entire global semiconductor food chain. So ASML is not listed. It's not a US company listed primarily in the US. The primary listing is in Netherlands, but its earnings could also impact the Nasdaq 100, given that it's an important player in the global semiconductor chain. So this ASML earnings will also be released before the start of the US session today over here. So with that, that sum up today's daily dose of market insights. My apologies for that slight technical glitch earlier on in the middle part of today's daily dose. So I hope that things resolve for now, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.